Stock market outlook for this Monday. It is June the 22nd, 2026, as we come into about the final week or so of trading before the end of the first half of the year, into the second quarter coming up next week. You can see Nasdaq down a little bit today. We've got a little rotation into the Dow, and even better, the Russell 2000 up almost 1%, 0.9% gain for the IWM. We're going to look at Nasdaq coming back from its earlier session lows, but some tech inspired weakness, partly driven by Google, which we'll take a look at. Parent company Alphabet losing some key AI players over to both OpenAI and Anthropic. So Google shares GOOGL on the downside today. We'll take a look at that one too. But look at the condition of the technicals of the market. We talked about last week how we just popped up. The DMIs had slightly broken there. You can see a couple weeks back on the QQQs, the pop up. We needed to get some follow through above that last Monday high on June 15th. That high you can see is held 744.76. Of course, a lot of noise around a deal, an Iran US deal, at least a 60-day framework, they're calling it, to be the start of a deal. And then, of course, over the weekend, the Strait of Hormuz was closed back down again. So you have all these noise items going back and forth. We'll take a look at oil, et cetera. But you see, we tested up to 745 this morning, slammed down to 735 or just under, now trying to retake that 737.5, 738 little intra-bar resistance area. But you see, essentially, we've got to get through that 745 to really get us going. And you see we had another positive DMI crossover the negative, which means, again, today's high marks a level you got to get through. That's right in line with the last 745 test a week ago. So compare it, though, to the other averages, to try to get the broader picture of where money is flowing or not flowing. You see the SPY not looking as good. You see it tested up last Monday, too, into its short-term high, 756 and 2/3. And it hasn't even come close to retaking that here today. So that's looking a little worse than the Qs in comparison. Again, I'm not bearish here, but just saying that these are sort of cool down measures. We're above longer term support lines, but we look at the rotation a little bit into the Dow here. We told you how the Dow had its DMI kiss and a kind of a good test for the bulls. It held that low almost right on the number of 500 for the DIA. And of course, you see the bounce to new highs, even though it ran into our upper 80-bar Bollinger Band. You can see that's been acting as resistance, but that's trending up. So that resistance trending up, that's a good thing for the Dow in comparison. And so you get some rotation. Remember, the Dow has NVIDIA and some other names in it. So I think the Russell IWM is a much truer measure of where the money might be rotating. And yes, indeed, IWM making a new high today. Big power up. You can see that it's a little DMI test point there last week, going back to last Wednesday. Remember, we had the Juneteenth holiday. The markets are closed on Friday, the 19th. So last Wednesday, we had that low right around 289. Now we're retaking that high from the start of last week around 298. We're 299 right now. Like that rotation into something that's not got the tech heaviness, right? So you see that's what's happening here. Some rotation away from tech in the short term. I'm not saying it's the end. Of course, Micron has its earnings due out Wednesday. MU has been insane to the upside. You can see another new high on another gap up. You can see as you look at big trends indicators that just mark the big trend, you can see our breakout above longer term bands happened on Micron all the way back here, just under 500, April 22nd's close. We were already getting a percent hour breakout in line with that above the key high there from April 14th was 465. And then the CCI did the same thing, that yellow line above its plus 100 following through. So that was kind of all systems go there with the ADX trending up. See, our ADX is not trending up now, so it's trying to turn and come back up. You can see that makes this move a little bit less convincing. At the same time, look, buy the dip retests have been pretty golden on MU. You can see right now we'd be trying to wait and buy the next dip. And of course, you look at a massive leverage vehicle like Soxel, SOXL, 3-to-1 leverage on the semiconductors, since its buy signal back here also a week before Micron or so, April 10th at 76, now pushing near 300 at the highs today, 302. Pretty insane, the moves we've had. And so again, I'm not saying chase into those. I'm saying at this point, you've got to be careful about chasing too far. So buying the retests is really one of the key secrets, and that's where whether you look at the DMI KISS, whether you look at the percent R and CCI test points, like that key low that happened back there at 181, now sitting at 300 almost, just shows you the ways you can trade this market among the leaders where the money keeps flowing. Of course, we look at the gold market, and you see gold has actually broken its 400 level last week. Look what happens. We test up into 400, 401, and then again 402 hit last Wednesday. You can see finishing back below 400. So we've said for months that gold was an area to rotate away from, as we got the violation here in mid-March as it undercut those lows about March 18th officially. So point being that, that tells you where money is flowing away from. I'm not saying it's a time to sell gold in a longer term sense, but in the short term, it says wait until you get the fresh new signals to the upside. When we talk about, of course, we like to trade a lot of the single tickers. We talk about NVIDIA, talking about chip stocks. We like to trade NVIDIA. We like that dip that it had here recently, kind of down into some support here around this 200 level. You see it almost touched 200 on the nose back there a week and a half or so ago. And so holding that level is a good sign, even though indeed it has lagged compared to the others. For our AAAs, Apple, Alphabet, Amazon, you can see Apple slammed down. It had a key DMI test point right at that low, 287.7. We bumped around it for a couple days, and now retesting 300, give or take, as some resistance. But you see not the strong trend that we had when you had not just the percent RCCI, but also the ADX trend going up in that green line. That's your best part of the trend in that case, to the upside, with the DMI's net positive. So again, we look at an Amazon, we got to look at Google with the news today. See Amazon underperforming here. It's just touching the 200-day in yellow, but something that we're kind of just waiting on that one. But look at Alphabet. You can see parent company of Google. You can see that's just now undercutting some of this key DMI test point support that should have held and was holding initially around 358 to 360. 358 hung in there, and then today it looks like it's going to undercut at 348 right now with an hour and a half to go before the close. So, that says, again, don't be surprised if we get a bit of a cool down, maybe in line with what you saw in February. We got in part of March where it kind of just went sideways and dipped a little bit there in later March with the markets. Remember, it did come roaring back. But this is one too where it's touching our 80 bar average, which would be another line of support around 343, and a close into there would end that attempted buy signal, which you see has not panned out. So they don't all pan out on those buy signals, but you can see that risk reward wise, they tend to be pretty good longer term breakouts when they break outside of those longer term Bollinger Bands. And we look at acceleration bands as well. So, bottom line is, of course, Tesla, and we got to talk SpaceX, right? Tesla bounced today, but you see hugging underneath its 200-day line in yellow there. So still kind of not doing a whole lot. Of course, a rumored to be a takeover target to merge with SpaceX. As we know, SpaceX, we don't have a lot of data, right? We have to go look at, say, an hourly chart here on SpaceX. Let's look at that over here real quick as we finish up. That, SpaceX, of course, it quickly became an optionable stock last Tuesday. And you can see it when it opened at 150. It was pretty quickly into the 160s. And then you saw it rallied up there briefly, 176, came back down towards 160 by the end of its first day of trading, then rocketed up on day two up to 192. Then you see the big surge up to 225 as Elon Musk talked about $1 trillion in revenue by 2031, maybe 2030. Got people really excited. And then you can see that has cooled off dramatically. We're right back into essentially where we were trading soon after it opened on last Tuesday morning. We're back into the mid 160s. So you say, well, what do you do with that? Well, essentially, we need a little more data to work with. But you see, we're kind of right now would expect that its IPO starting price was 135, but really its first trading price was 150. So you know that the big underwriters don't want to see it undercut that. Of course, initially made Elon Musk the first trillionaire in the world on this initial surge here. So it's going to be really interesting to see how SpaceX pans out, what it means for the markets. But basically, what I like is this chart. We'll go finish with the one that we pretty early started with, the IWM. That as long as we can see money rotating net into other areas that are maybe not as tech related, this is a good sign that the market is rotating in a healthy fashion. Okay. And then you can start searching across sectors. You can start looking at what's working. Healthcare kind of retesting its 200-day on the XLV. I was mentioning industrials last week, just the true industrials, XLI, not the Dow industrials, because, they're loaded with tech stocks. But you see, you look at that's actually performing pretty well here, kind of coming back up to that early March high. And you start just going through the list. Financials, the banks have done pretty well lately. And you see getting a fresh buy signal actually on the XLF, which is a good sign that maybe we can get some momentum going here. See, it's kind of retesting those bands. Like there's a classic low risk reentry on the Thursday low there. And we're not far from it right here, 53.5. We're trading 53 3/4. To me, that's what I like to do, is basically put on trades soon after breakouts on first retracements. So looking at financials, and you say, well, which financials? Well, like a Citigroup, it's already been broken out, but it really surged to new highs last week. Sure, it can go through some retracements along the way, but you can get some relatively cheap options on some non-techs that are trending, and that's something we like to do. We did that with a tech name this past week with Roblox. It's not as cheap on the options, and you see it didn't end up falling through here, but we got a quick set of targets for our Grand Slam traders just on that quick move. Looking at the hourly charts this past week, it really surged quickly from the first breakout entry area for us around the 45 zone, quickly went to 453, right? So daily chart doesn't look like much, but the hourly was a nice example of that. So anyway, point being that we've got loads of ways to trade this volatility, and even if you like to trade some individual tickers, like a Palantir, you see surged up. We caught it, like we said, for that 11 bagger on that quick surge back to the 200-day, got out right into that resistance. Glad we did, because it's now making new lows. So really interesting volatility here. Just got to be nimble, got to be quick, and we call out real-time trades for all of our big trends alert services for a variety of option strategies via real-time emails and real-time text alerts to subscriber smartphones. If you'd like to get some of those trade alerts at a very reasonable entry, give us a call, head 800 Big Trends, or drop us an email over to clientcare@bigtrends.com. Hope you have a great trading week. I look forward to seeing you again next Monday. Trade well and stay well.